Okay, good day, guys. I hope all of you are well. Today we'll be looking at a bank recon question. And okay, let's start with the question. Your neighbor Joe recently started a business selling curtains and linen. Joe, who had just received his bank statements, called you in a panic because the balance on his bank statement is lower than the bank in his books. You explained to him that there could be a number of reasons why this can happen and offered to help him to reconcile the two balances. Okay, guys, so they say the balance on the bank statement as at 31 March 2013, it's 30,745. It is presented as a credit. So we have to put it in immediately because it's given. So it's opening balance 30,745. Remember, guys, with these type of questions, you must always keep in mind that as the bank sees you like as their debtor. So basically, when you put the amount in, you must always keep in mind that the way that you must always keep in mind of like how the bank sees you. So, okay, let's continue. So they say the bank, according to the general ledger, consists of a capital contribution of 60,000 that was made by the owner on the 1st of March 2013 and money received for cash sales and receipts amounting to 26,250 and check payments for inventory and other expenses amounting to 55,800. So here, guys, you must pause. So this amount, it's not the amount in the bank statement. It's the amount that the owner contributed. So basically, they are trying to tell us that this is the opening balance of like our bank, like of our bank, basically our cash journal. So we must put it in. So it's gonna be opening balance. It's gonna be 60,000 plus 26,250 plus 55,800. The reason why this amount we don't include in the bank statement, it's because it's already included in there, guys. So this is gonna amount to 30,450. Okay, let's continue with the question. So it says checks totaling 14,266 were deposited by Joe on 29 March and appear on the bank statement on the 4th of April 2013. These checks are correctly recorded in the CRJ. So basically, when they say these checks are correctly recorded in the CRJ, they mean that in our bank, they're already there, the amount's already there. Because as I told you guys, like the bank, you can basically split it into like a CRJ and a CPJ. So once they tell you this, they're trying to tell you that it's already in your bank general ledger account. So that means we have to see if it is already in the bank statement or not. And by here, they are saying it was deposited on the 29th of March. That means it's still within this month. But they say it's going to appear on the 4th of April, which means that in the bank, the amount will only be visible next month. But remember, since we're reconciling in our books, in our bank, it's already there. But in the bank statement, it's not there yet. It's only going to be there on the 4th of April. So we must include it in our bank statement. So it's going to be the deposit, a deposit of 14,266. Deposit. We have to include it. So that means we have to add it 14,266. We have to include it in here. Okay. I hope everyone understands why I included it there. So let's move on. So it says on inspection of the bank statement, you notice that interest, income, and bank charges for the month of March are 175 and 250 respectively. So basically with this amount, guys, you must always remember there will be the bank charges and the interest. They won't be in our books yet because we know nothing about this. It's not part of our daily transactions. So basically those amounts, it's amounts that the bank charges to account or our account incurs it due to having like a positive balance. So in our thingy, in our bank, we wouldn't have taken them into account because they are not, it's not cash per se. So we'll have to include it in our bank. So we'll say in our bank, we'll say bank charges, bank charges. It was 250. So with this amount, guys, we'll have to include it here as 250 because we're gonna have to pay it over to the bank. Bank charges and interest. I think we got interest income. Yeah, interest income. So we're gonna have to include it on the debit side because it's like an income. It's money that's coming to the business. It was 175. Okay. So basically with these two amounts, guys, the reason why we included these because in our bank statement, the bank already included this amount on our account, but we have not yet included them in our book. So that's why we're taking them into account now. Okay. Okay, let's move on. So it says, upon the inspection of the checkbook, you notice that check number 16 was issued for 426 stationery and check number 17 for 120,000 to a creditor on 30 March 2013, and it did not appear on the bank statement. So basically with these amounts, they're telling you that they did not appear on the bank statement, meaning they're already in our books, but they are not on the bank statement, which means the bank has not yet taken them into account yet. So we have to include them here. So it's gonna be stationery 426, stationery 426. And remember, since this is a payment, we're gonna have to deduct it. Ne? And then we're gonna have to also include the other amount for check 17, which was 120, which we paid it to the credit to one of our creditors. So we'll also have to include it here. So it's creditor. I'll just say number 17 and here number 16 because the check numbers, it was for 120. So we're deducting them because we made payments for these amounts, but they do not yet reflect on our bank statement, which means the bank has not yet deducted these amounts from like the bank statement. So that's why we have to remove them from we have to deduct them so that the bank can see that we pay these amounts. So they have to be deducted from our bank. Okay, let's move on. So then it says, okay, the bank statement showed a direct deposit on 28 March 2013 from Mr. Mugeti. Data of the business. So that means we got money for 9,500. It says on the same day, deposit of 5,350 will appear on the bank statement. Joe did not know from who it was or what it was. This case was still unresolved. So this one, guys, it's key. This one, it's very important. The 5,000, this one, because it says the amount appears on our bank statement, but we don't know from who it was from. So this triggers like the amount could either be an error or the bank it's either an error, the bank made a mistake and included it in our statement, or we don't yet know we don't have any recollection of this in our books. So basically with amounts like this, you must always remember that in our books, remember for every debit, there must be a credit. So for this amount, it means we won't have a credit for it or a debit for it. So which means in our books, it won't be there. So let's first take into account the 9,500. So it says on the bank statement showed a direct deposit on 28 March 2013 from Mr. Mugeti. A debt of the business. So which means it appears on the bank statement. It's on the bank statement, which means it's not in our books yet. So we have to include it in our books yet because the bank says it's there, but that means it's not in our books yet. So let's include it here. 9,500. I'll just say deposit. Okay, let's deal with this 5350. So this amount, guys, it could be an error, which means we cannot like accept money for which we do not know where it came from. So we have to reverse it. It might be that the bank maybe simply made a mistake, so they might come back and reverse it. So here we're gonna say error or correction of error. Okay? Then we're gonna remove that 5350. Because guys, we cannot accept money for which we do not know where it came from. So that's why I'm removing this one. I hope all of you understand. So let's move on. So okay, it says an amount of 760 appears as a debit on the account statement with reference RD. It was discovered that a check is received from Mr. Mold after settlement of the 5% granted to her. So guys, with this amount, RD checks, it means it was returned. It means it was returned to drawer, which means when this check was cashed, we found that the debtor didn't have any money in the account. So basically, this means that amount, we recorded a receipt. So in our bank here, it means we recorded the amount as we got it. We recorded it as like we received the amount. But in actual turn, when the bank went to collect the money from the debtor, they found that the person doesn't have any amounts in the account. So therefore, the check bounced. So since we remember for every debit, there must be a credit. So because we debited here that amount, let's say in the previous month, and the bank found that there was no money in the debtor's account, they therefore returned the check back to us. So therefore, we cannot say we got that money. So we have to reverse that transaction as if it never happened or we never recorded the receipt of the money. So here we have to say RD check. It's 760. Because like we're reversing what we did in the prior month. Let's say if the transaction was this month and we said we received, let's say the debtor sent us a check for, I don't know, for a payment of this amount, would have recorded it here. But if when we go to cash in that receipt, we find that the debtor doesn't have any amount in the account, that check will bounce, and therefore we'll have to reverse it here. So this is what we did here, basically. I hope you all understand why the amount was reversed. Okay, let's move on. So that's all the transactions that took place. So now we'll have to balance. Remember, when you're doing a recon, the most important thing is that your bank statement and your bank, they must always be equal to each other. That will tell you that, okay, whatever you did, it's correct if your amounts equal to each other. So, okay, let's calculate here. So when I add all of these amounts here, I got, it's 4125. 4125. Then the balance here to ensure that this side equals to this amount is gonna be carried down. It's gonna be 39115. I hope all of you are getting this amount, ne? Okay, let's also calculate the bank statement to ensure that we get the same amount. So once I add the 30,745 plus 14,266, deduct 426, deduct 120, deduct 5350, I get 3911.